the significance of whole numbers. Okay, the significance of whole numbers. Now, it's a very simple concept. It's very strong in trading. A lot of times, most times, traders don't even pay attention to price levels over here and what these numbers and these prices and the significance of these prices mean. So, um, you know, whole numbers are very significant, and I'm gonna tell you why and how to apply it to your trading. Okay, so we've got some support resistance lines on for very obvious reasons, as you learned how to properly apply support resistance in the previous chapter. We've got our trend line here, right? We've got our trend line here. And as you know from the previous chapter, we are not interested in any trading until price reaches a particular support resistance area. And as you can see, way back here, bounce, bounce, bounce. Very, and this is on the daily chart, right? So very significant support resistance. And as you see, as we come to current times, that was the history, but as we come to current times, that's a significant area. That was previous support back there, now is acting as resistance. All right. Now, here's where things start to come together. Here's where things start to make sense in regards to your trading. Um, the secret sauce, so to speak. Okay, so price is very significant. Whole numbers, very significant. Think about it like this. When someone asks, hey, can I borrow some money? I gotta, buy something and I'm a little short. Do you think to yourself, just ask yourself this. Do you think to yourself, okay, yeah, I'll let you borrow some money here. Let me give you $4.22. Of course not. You don't think that. You don't think that. No one walking this earth thinks that. Or, hey, I got a bill I got to pay. I'm a little short. Can I borrow some money? You don't think to yourself, yeah, sure. I'll let you borrow some money here. Let me give you $7.39. You don't think that way, period. It's just human psychology. All right? What do you think? Or even if you were borrowing money from someone, you say, hey, I got something I want to buy here. I'm a little short. Can I borrow some money? You don't think to borrow $5.23. What are you gonna do? And the people that ask money for you, what do they expect? $2, $3, $4, etc. $400, $500, $600, etc. That being said, the psychology, when you hear the term psychological number, I'm sure you've heard that term in trading. Oh, this is a psychological number. That is what they're referring to. That exact psychological example that I just gave you in regards to the significance of price, the significance of numbers when it comes to money, currency, whatever, right? Or borrowing money, or just money in general, um, and how it applies to trading. So how would that apply to trading? How would that be significant to trading? So we know support resistance. We know the rules of trend lines and trend line breaks, and you know and things like that. Now combine that also with price. So let me give you an example here. How would that apply? Okay, how would that apply? Let's get an example. Let's just change the color of this. And if you've ever seen, those of you who take my signals, if you've ever seen my charts, for example, on Instagram, Brandon Carter FX, and I give demonstrations, you'll notice I always have white lines as well. You'll see the purple lines, right? Support resistance. I like to color code my, support resistance and price numbers. So the purple ones is always my support resistance areas. The white lines are always my round numbers. Okay, so we have the round number of 1.300. All right. We also have the price area of 1.2900. Now, how is that significant, and how would you use that in trading? Well, as you can see, look how strong 1.2900 was. Is that a coincidence? No. As you can see here, price came right up to that level back here and fell over 500 pips. All right. Well, let's drop down to the 4-hour. That was the daily. Let's drop down to the 4-hour. So how would that apply? Well, we know our support resistance area. We are not interested in getting into anything until it comes up into our support resistance area. Boom, that happened right here. What else? What else will we have looked for? Well, at this point, we would have drawn our trend line. This is rule number 2. We would have, on the 4-hour, waited for a bearish candle close below the trend line. Boom, that happened. What else can we look for? 1.3100. How do you apply that? Well, knowing the psychological ways of how people think in regards to numbers and price and money, it's reasonable to think that if we're working our way from 1.3100, that the next reasonable level to come down to would be 1.3. And then from 1.3 to 1.2900. And then from 1.2900 to 1.2800. And then from 1.2800 to 1.2700. And so on and so forth. In confluence with the other rules, right? So you'll notice I have several white lines here. They're all a range of 100 pips. Now, how do you use that? Again, we'll ask again, how do we use this and the significance of these price levels with our trading? Number 1, higher time frame support resistance, daily chart. Those are the purple lines, support resistance. Boom. Number 2, trend lines. Do we have the trend line? Yes, and all along we're waiting for it to come up into our support resistance area, right? Okay, that's rule number 2. And we know the rules with trend lines. What do? Drop down to the lower time frame. Let's back it up here. Drop down to the lower time frame, and we see more detail of what's going on when price gets there. Price is there, getting there. At that point, we would have drawn our trend line across here, 4-hour trend line across here, waited for the rule to be met. Boom, bearish closer below. That gives us a bearish bias. Remember from the previous chapter, that gives us a bearish bias. If we have a bearish bias at this point, and at this point it's also in confluence with the psychological number of the 1.3100. All right, 1.3100. That is the whole number of 1.3100. Now, if we're in a bearish bias, what's the next level that we could look to come down to? Well, 1.3. We have 1.3100, and then we have come down to 1.3. So that alone there gives you reason to believe that price is going to go from 1.3100 to at least bare minimum down to 1.3. Okay. Um, Also, just more confluence. Look back here. Look in this section. What is that? Previous resistance. Previous resistance. So that's more confirmation and confluence with, okay, we're at the support resistance area. Our rules have been met to change to a bearish bias. We are at the psychological number of 1.3100. Now that bearish bias has happened right here, when that bearish candle closure, 4-hour candle closure happened, we have reason to believe that we'll go from 1.3100 to 1.3 minimum, at least, which is 100 pips. Reason we care about going from, whole number to whole number is for the simple fact that that's the psychological, the way the hedge funds think, the way market makers think, the way people in general think, period, just across the board, in regards to price and how consumers interact with price, right? Whether you're a trader or whatever you are. Okay, so it's you have reason to believe that we get down here, we could meet some new support because of previous resistance in confluence with our bearish bias, that we're going to catch at least 100 pips going from psychological number to psychological number, or we should say whole number to whole number. And as you see here, we got the bearish break, we got the retest, and boom, we hit. What next? We broke below. We have reason to believe that we should now go from 1.3 to 1.2900. And what happened? Boom. We came here, a little consolidation, but for the most part staying below 1.2900. We have reason to believe, of course, with rules being met, that we should go from 1.2900 to 1.2800. And boom, look, that happens. Okay, and as you can see here, we're trading below 1.2800. So we have reason to believe, and keep in mind, at this point, we have a bearish bias. We are only looking for shorts because what happened back here? It happened on the 4-hour, this trend line break, right, and close. We have a bearish bias. And this line here is the daily trend line. And we also have a bearish candle close below. With that being said, we are only interested in shorts at that point, as we know. So go from 1.2900 to 1.2800. 1.2800 to 1.2700. 1.2700 to 1.2600. This is really easy. This is really simple way of trading in confluence with all the other rules being met. Support resistance, which number one, waiting for price to come into a support resistance area, purple line. Number two, waiting for a trend line break, candle closure, bearish, to happen once price, anticipating a reaction at that level, but confirmed with a bearish candle closure below a trend line. Boom, that happened. And that there's no coincidence that we're also at a psychological level of 1.3100. And at the time that happened, being that we have a bearish bias, we have reason to believe for price to come down to 1.3. Bearish candle closure below that, we have reason to believe, because our bias is short anyway, that would go from 1.3 to 1.29, 1.29 to 1.28, and so on and so forth. Now you may say, Well, what about this consolidated area? How would we have, how would we have handled that? Well, we would have gotten more detail. So when price came here and did this on the 4 hour, well, how would we have entered that? How would we have even entered that? Well, we would have dropped down to a lower time frame to get more detail, following the same rules, right? Following the same rules. And that's this area, following the same rules, waiting for bearish candle closure below the trend line. At that point of, and how do we find that? Of equal measured reaction. Boom, boom. We know to connect at least minimum of 2 points. Got the bearish candle closure below. Could have literally entered our order there. Stop above the most recent highs of about a good 40 pips or so. And caught a good 80, 90 pip move. Trading is simple. People make it hard. Again, trading is simple. People make it hard. Okay? By just not following rules, not having rules in place. But we have rules in place. So that is the significance of round round numbers. When everything else is met, when all other rules have been met, support resistance area met, check. Trend line broken and closed below, above, or bearish, depending on, what you're looking for. That happens. Check. Are we around a round number? On this particular pair, USD CAD, 1.3100. The very last number, we don't count that number. That's a micro number. It's only from the 4 digits after the decimal on this particular pair that matter. We don't care about that last number at the very end. Okay. Looking at your charts, ask yourself, support resistance area met, check. It's reached there, but is it going to react? Is it going to have a reaction to, go short once it reaches there? We don't know. How do we confirm that? Draw the trend line, bearish candle closure below on that particular time frame being analyzed, which here in this case is the 4 hour. Boom, check. That happened. We got our bearish candle closure below. Are we around a round number? Check. That has happened. And at that point, we have reason to believe we can catch minimum a good 100 pips, which we did. And that's it to it. And it's just the reverse if we were looking for a long, right? Let's look at a long example. All right, so as the market's coming down to our support, the purple lines are the support resistance lines. We're not interested in the market. The market would be doing all this, right? It could be doing all this. We do not even care. We don't care. Come to our support resistance area. Then we're interested. Come to the support resistance area. Boom. Our radar is up at this point, right? Our radar is up. And as it's reaching there, we can draw on our trend lines. And we know what we're waiting for. We know what we're waiting for. We're waiting for, there we go. We're waiting for our candle closure below. I mean, in this case, our candle closure above. So we would have had our trend line drawn here. We would have seen this. We could have even drawn an inner trend line. Right? And we know our rules. Support resistance area met, check. But we're not just gonna put in a buy order at a support resistance area. It has to be confirmed. How do we confirm it? Wait for the candle closure above the trend line on the time frame being analyzed. So boom, we got the candle closure above. Now we know at this point we have a long bias on the market. It's come to our support resistance area, in this case a support area, It's confirmed that it's acting as support. It's broken this trend line to the upside. We now have a long bias. And number three, right, is what whole numbers are around at this point. 1.2300. 1.2300. So we have reason to believe we'll go from 1.2300 to what? 1.2400. Guaranteeing ourselves at least a good 100 pips. Okay. Boom, we got that closure, candle closure above this trend line, right? So our bias is still long, right? Candle closure above. Support resistance area met. Confirmed by candle closure above. What and also what whole number is around 1.2400. Our market bias is long anyway, so at this point, what can we expect? We'll go from 1.2400 to at least 1.2500 due to the psychological level of how people think in regards to price. That will go to at least 1.2500. Okay? Boom. Met. Our market bias, our bias on the market is long anyway. We are only at this point looking to go long because of the rules that were met back down here. Boom. We hit 1.2500 as predicted. At that point, what can we expect? All right. We can expect to go from 1.2500 to 1.2600. Well, you might say to yourself, well, how would I have entered that market? After, let's say you didn't, you came to the charts late and didn't see all this, this whole rally happen. Well, we know all the rules have been met back here for a long bias. So we're not looking for any shorts. We're only looking for longs at this point. And due to the psychological way of thinking about in regards to whole numbers and how people think in regards to price, you know that, okay, our bias is long. We're at 1.2500. It's reason to believe that we should go to 1.2600. Okay. How would you have entered this market? Well, you know that you've got to drop down to a lower time frame to find entry at this point, which is around this area right here. So let's find this area marked with this arrow on a lower time frame. Let's drop down to the 1 hour. Following the same rules. Okay, still don't have enough detail. Still don't have enough detail to do anything. Let's drop down lower, 30-minute. But the rules never change in regards to how we enter the market. The rules never change. Let's find that same area. Boom, here's the same area on the 30-minute. Here's the same area. All right, now we've got some details, okay? Now we've got some details that we can work with. And what will we have done according to the rules at this point? Draw the trend line connecting 2 or more points of equal reaction, awaiting a candle closure above on the timeline being analyzed, on the time frame being analyzed, which here is a 30 minutes. So we're looking for a 30-minute bullish candle closure above this trend line. Boom, it happens here. Literally could have entered the market right there. Stops below here somewhere, a good 30 pips. And because of how we know people think in regards to price and whole numbers, and we know we have a bullish bias anyways because the other rules that were previously met, we have reason to believe it's a high probability that we'll go from 1.2500 to 1.2600, which gives us a guaranteed, well, not guaranteed, but close to it, of high probability of 1.2500 to at least 1.2600. And what happened? Those rules were met. That happened. It took some time, but we eventually came, boom, here, 1.2600. Okay. And so that's a perfect example of how the significance of the whole numbers in regards to using them in confluence, not by themselves, but in confluence with other rules, trading rules being met, to give you direction, to give you, um, some point of reference, and to put the market in context, um, to put the market in context of what to expect, of what to, to put the odds in your favor that the market is going to react favorably, in regards to your trading. So, as you've seen, we didn't just put sell and buy and sell orders at these whole numbers. That would be, a very ignorant thing to do and a quick way to blow a count. We waited for rules to be met, starting with the higher time frame. What's going on in the higher time frame? We looked, you know, for example, back on the daily, we looked, purple line resistance, drop down to a lower time frame, which was the 4 hour. What did we wait for? Once it came up into that resistance, to confirm that we would have a bearish bias if it reacted as we expected to react as a resistance area. 4 hour. Remember the time frame being analyzed, the 4 hour here. 4 hour candle closing below the trend line. Boom, that happened. What else do we look for? What's the whole number that's around that area? 1.3100. So, being that our bears, we have a bearish bias at this point, we can expect a 1.3100 to go to 1.3. That happened, and boom, that's how we trade these markets. That simple, that easy, that easy. So, let's drop down to the 1 hour here. And you could have gotten in this trade with a very, a reasonably significant tight stop. And here, see this spike here? People would have gotten tricked to go short early if they didn't wait for the candle to close. So here we have this red candle right on the trend line. And then here, when this next candle started, it started right here on the trend line, it started to drop. And people would have thought, oh, it's breaking the trend line, let's jump in short. Nope, would have got stopped out because it came right back up. That's why it's important to wait for candle closure. That's why it's important to wait for bearish candle closure. And as you can see, it went back up, right back to what, 1.3100 to the pip, right? But what did it do after that? It came back down, boom. Now we got our candle closure below. And now we can confirm that we have a bearish bias on this market. That being said, we're going to catch at least a good 100 pips due to the psychological way of how we think about whole numbers and price in general. And we would have caught that. Boom. 100 pips. 100 pips. 100 pips. White line to white line is 100 pip. 1.2800, 1.27, 1.27, 1.28, 1.28, 1.29, 1.29, 1.3. Each 100 pip range. And that's all we're interested in. Catching at least minimum of 100 pips. Alright? So that pretty much concludes how we look at the market in regards to the significance of the price. Pay attention to price. And you can even kind of scan through your watch list and just look at the prices themselves. Look at the numbers. Look at the price. see is it around a whole number, and then then you can open that chart and do further analysis, see if it's at a support resistance area, and go from there. But just the fact that it's around the whole number, and knowing how people think in regards to price and how the market moves from one whole number to the next, you know you could just wait for price to get around whole numbers on your watch list, and then at that point spark your interest just to take a look at the market and do further analysis. And if it just so happens to be at a support resistance area combined with a whole number, you already know the rest of the rules that you want to happen at that point. Support resistance area, trend line break, closure above or below, being around the whole number, giving you a market bias based upon the break and close above or below, and then expecting to go from anticipating from one whole number to the next, which guarantees you a good 100 pips or more. So this is my particular trading style. That's what I mean. This is just one of the examples that I mean in regards to proprietary, and how you know I think in regards to the significance of putting all of this together to come up with a consistent, repeatable trading plan to do over and over and over again.